I hope everyone's having a brilliant day. I recognize this is a little bit the graveyard shift, but we're here to talk about one of the most important topics, I think, that came up quite early in the day. I heard Philip from Zilch, was the first thing that he said, the most important thing on his agenda is how do we get more scale-up capital into our UK grow FinTechs? And it's important because FinTech has been a growth engine for the UK for the last decade, and yet here we are still saying, where is that growth capital? Some would say there's an abundance of early stage capital, but where is that growth capital when a lot of our FinTechs have to raise their Series A's, B's, C's from investors in the US? And we've got Mansion House, we've got Pisces, we're going to hear a bit more about that today. But is any of this actually working, and what still needs to change? And so excited to try and figure some of these answers out today, and I've got four great panelists who are going to talk us through that, and we've got a very short period of time, so I'm going to shut up and hand it over to them. But Samantha, I'd love it to open with you. If you wouldn't mind, just a short note on yourself and FinTech Collective. And you've got one foot in the US and the other in Europe, so I'd love to hear from you kind of what's changed over the last 18 months when it comes to early stage funding. Maybe we start there.
Fantastic. Thanks, Adam. And great to be here today. Thanks for having me. I'm Samantha Wulfson. I'm a principal on the investment team at FinTech Collective. And just a short background about us is that we are a global venture capital firm headquartered between New York and London, investing in early stage FinTech and financial services founders that are reimagining the way that money flows throughout the world. So in terms of your question on funding, I would say let's start with the headline figures. In 2025, there was a 20% increase in global FinTech funding, so that number actually surpassed 50 billion. In the UK, however, that figure stayed flat at around 3.6 billion, and there was actually about 10% decline in the sheer number of FinTech companies that were funded. So what that means under the hood, I think, is a real flight to quality, especially with the first, I would say over the past 18 months, there's really been a significant change throughout the industry as we see the introduction of AI into financial services in earnest. That's really unlocking the ability to create more affordable, more specific, well-integrated, contextually relevant solutions for end customers. And so we're seeing a real bifurcation in where the funding is going. In that, number one, there is a new wave of AI native FinTech companies that are being founded, which are really attracting the lion's share of the capital. And then there's a second category of the more traditional FinTech or financial services companies. And in the early stages, there's now an even higher bar that those companies to meet in terms of traction and also underlying unit economics to really attract the same level of funding. In terms of round size, when you're looking at the UK versus the US, the UK typically sees median round sizes in the early stages of about 50% that of the US. But I think in this age of AI, it's actually a really interesting time because it forces founders to be more responsible and resourceful with the capital they do raise when you can leverage AI to accomplish the same product builds with significantly less employees and resources. In terms of the verticals that the UK really stands out, I think there are so many proof points in the later stages already, and so much of that is thanks to the global financial hub that is sitting very close to us today and has really kind of spurred this generation of companies in, say, banking, payments, insurance, and wealth and asset management.
Amazing, thank you. I want to draw James into this now because you sit in a slightly different position in the ecosystem, investing a little bit later. So really want to ask you kind of where is this this kind of funding gap, and why does it exist from your point of view? Is it a founder ambition problem? Is it a wrong type of capital problem? Is it a lack of capital problem? How do you see it?
Yes, so good afternoon, everyone. I'm James Codling. I'm the managing partner of Volution, which is we're kind of, I define it as mid-stage. I don't like stage investing, but if you were to put us anywhere, we're kind of mid-stage investing. We're kind of investing post-Series A and companies up to Series B. So typically companies that have found product market fit anywhere from 5 to 20 million of revenue. And we very much like companies that are driving productivity gains in capital markets and in enterprise. So that really means that core part of our portfolio is in FinTech, and we're one of the UK's leading investors in FinTech companies. It's a good question about the capital gap. So we identified this probably 6-7 years ago, that the UK was producing really interesting technology, fundamentally driven by London being a hub for capital markets, but also our universities providing not only engineers, but talent in terms of new technologies that can drive that innovation. But what we saw was, and I don't think this has unfortunately changed, because we've been debating this in this hall, I think, for probably 12 years, is that we have a very functioning early stage ecosystem, seed to Series A. And the UK is actually particularly good at attracting foreign investment at later stage, but also funding those companies ourselves. But somewhere in that journey, capital dries up, particularly for companies that might be taking slightly longer to get product market fit than their Series A business plans envisage. So we think that exists for a number of reasons. We think that it exists because a lot of startups don't meet their Series A business plans. We think it exists because Series A funds in this country tend to be probably under capitalized in terms of the amount of dry powder they have for follow-ons. We think there's a little bit of fatigue that can exist in venture capital funds. But I think also what happened in 2020, 2021 means that a lot of VCs haven't been able to raise new capital. So the lack of DPI that's been returned to investors has been relatively benign, and that's led to VCs only really being able to support their portfolio companies. So I think it exists for a number of reasons. It's certainly not an ambition gap. I mean, there's no shortage of ambition in this country. There's no shortage of some of my team are in the audience, and we see this day in, day out. There's huge amounts of interesting companies, innovation, people with real global ambition. And the one thing I will say is that to scale a business in the UK, you have to be globally focused, and every founder that we work with is globally focused, so there is no lack of ambition. So I think it's what we're trying to solve for is, well, how do you bridge that gap? And we can talk about how we might do that in a minute, but I'll defer to others for the time being.
Thanks, James. I'm going to pull on Neil a little bit. You're bridging the gap a little bit from the private markets into the public markets, and would love to hear a little bit more about your role at the LSE. I know that Pisces is now live. Would love to hear a little bit more about that. But is the UK now a credible destination for UK tech to list in?
Oh, a tough question there, Adam. It's lovely to meet you all. My name is Neil Shah. I head up coverage of the tech sector at the London Stock Exchange. I've been doing that for about 6 years. I've about 15 in banking. And look, we're there to help founders scale their businesses across our public and private markets. Taking that last question, Adam, is the UK credible? Look, I think we were credible in 2015 when WorldPay went public. We were credible in 2021 when PensionBee went public with £6 million of revenues, a £50 million revenue run rate business today. They've 5x'd assets under management. Romy Savova, CEO, owns 32% of that business, all in ordinary shares. And we're credible when Shawbrook went public in October, raising 400 million, 7 times oversubscribed, 38% of the demand out of North America. I think we have a vibes problem and a sentiment problem, but the capability is there. And look, what we've been doing at the London Stock Exchange is helping the ecosystem reform. So we just had the biggest set of reforms undertaken to the UK listing environment in about 40 years. It's never been easier to list, to raise capital. We had that played back to us from bankers like JP Morgan and law firms like Latham & Watkins when they're comparing international venues. It's never been easier to get into the FTSE. It's never been easier to pay your staff in line with international peers, and potentially even pay NEDs in stock to raise capital from retail. So a whole bunch of reforms, and we touched on Pisces, which fits neatly into this. About 3.5 years ago, the Treasury and the FCA came to us with a problem to say, is there a need for periodic liquidity for companies valued at less than £50 million? And we said, look, there is a need, but I think you're capping your ambition. let's turn this on its head. Where this would be really valuable is for companies that have been around for a long period of time, where you've got employees that have taken a below market salary and been paid in equity. And what if we can help those employees get some liquidity, so we create more Charlie Dellingpoles and Will Neals, who have funded about 200 businesses each. And this is how we get this flywheel turning. We had our first transaction with Oxford Science Enterprises in March. I've been trying to execute a deal today, so apologies if you've seen me on my phone and not fully engaged in your panel. It wasn't intentional. But there's stuff coming down, and as my CEO just said in the old library, our IPO pipeline is probably as strong as it was back in 2005. A lot of engagement with private equity, lots of businesses that want to come into the FTSE 100, 250. We just need our leader of the free world to pipe down a bit.
Indeed. No, thank you for that. And Rahul, I want to pull you into the conversation. I'd love to hear more about what the Office for Investment actually does, if you would enlighten us. And then I would love to hear what you're doing to make the UK as attractive as possible for international fintechs to come and scale here in the UK. And how are you measuring the success of that as well?
Thanks a lot, and it's great to hear the optimism on the panel, because I think it is well warranted, and the vibes can certainly do with with a bit more of a boost. So I run the Office for Investment Financial Services. It was launched by the Chancellor last July as the UK's concierge service for international financial services investors, and essentially we are targeting the world's most innovative, fastest growing financial services firms from around the world to come to the UK, to set up here, to grow here, and to flourish here. And look, the reason we set this up is because we're proud of the UK's strengths in technology, in financial services, but we know there's global competition for talent. We know there's global competition for capital, and we recognize that we can't be complacent about our historical success that you see here in this building and in the city and across the UK, if we want to ensure that the UK remains the best place for fintech and for financial services going to 2030, 2040, 2050. So it's a very long-term view. And one of the barriers that we're trying to fix is that the UK ecosystem is really big, it's really well evolved. There's been a long history of it, but it is sitting in lots of different silos. It is kind of, there's a lot of different places that you have to go to if you're a firm that wants to set up. And the idea is that we can help firms with that information asymmetry to bridge all of those gaps, to join up the UK system. So we're a partnership of government, the regulators, and industry to essentially service firms throughout the journey of coming to the UK, if they are here already, helping them expand, helping them ensure that the policy mix here works for them. If they need the visas to get the talent they need, we can kind of help them with that. And so it's that entire life cycle. And then listings, if they want to explore the capital markets, how can we do everything for them and solve their barriers? So that's basically what we're doing. Our regulators are playing a very important part in that there's a domestic story, that they're improving their authorization timelines. There's the supercharged sandbox. There's lots happening to make us a very, very forward-leaning jurisdiction that's competitive on the capital markets, on technology, on financial regulation. But what we're doing is we're ensuring the system works as a whole.
Thank you. Thanks for that. And a lot of optimism across the panel. So I'm going to go back to the investors, the critical investors, and hear your point of view. We're a bit short on time, so maybe a question to both Samantha and James. Happy for either one of you to go first on this. But if you think about the companies in your portfolio, and they're looking to scale, and they're looking, outside of the UK for follow-on capital, like what's the decision-making process look like? Like, talk us through the reality of, a company looking to raise capital here in the US. Like, why are they not choosing to raise money from here, or why the US? I'd love to hear kind of the reality on the inside from your point of view.
Great question. I can kick it off. So I think when it comes down to the decision about which investors to take money from, this is very company specific. So at the end of the day, as we all know, capital is essentially a commodity. So with that comes the question of what additional value those investors can bring. And so depending on whether the company is focused on expanding in the UK or the US, then they'll expect their investors to really bring with that capital the connectivity to hire top talent, open doors to partners to build out local infrastructure, and probably most importantly, be able to connect them with the key decision makers at their ideal customers. So that's something that we spent a lot of time on in the FTC portfolio, is really creating this cross-continental bridge between the US and the UK, because we have headquarters both here in London and in New York. And so when it comes time for our companies to raise, really thinking about, okay, geographically, where is our priority and what makes sense from the more nuanced perspective of where will really be the key levers to pull to drive success over the next 24 months.
I think it's quite multifaceted, actually, that question, because I think there's a lot of reasons why foreign investors might want to invest in UK scale-up or growth capital opportunities. So valuation is always something that comes up in conversations that we have. I mean, the UK is fundamentally cheaper than American companies, but we produce just as interesting technology, just as much ambition, and we're fundamentally cheaper on an engineering level as well compared to US. So actually there's a lot of reasons why foreign capital might want to flow into the UK. The reality is, when you start to grow and you start to scale, your capital raising ambitions change slightly. So you move from probably from a primary thinking mentality in terms of cash runway into actually, I probably want a partner who can deliver more, but also can probably give me secondary liquidity for my investors. So actually we see an awful lot of investment at sort of growth stage of companies taking maybe even 50 to a couple of $100 million of capital, some of which is used for primary, but a large chunk of it which is used to clean up cap tables. There's not many UK investors, quite honestly, that can do that. I mean, there just isn't. So naturally, that moves you towards sort of the US. But I think for companies, we talked about it just earlier, which is if you're globally minded and globally ambitious, you probably want global investors, because it's global investors that will help connect you with opportunities in their region. So we're very fortunate that our co-GP partner, SBI, is based in Japan. That presents huge opportunities for portfolio companies here in the UK to access Asian markets. And the same is very true of the US. So I think if we want to be a global fintech hub, you need to think globally, and I don't think there's anything wrong with having global investors. Clearly, we'd like more UK capital to be flowing into those companies, but I think it works.
Yeah, from my vantage point at Antler, I kind of think if you've got two choices, a follow-on investor who's got a track record of investing and scaling businesses, or you've got somebody who's new to the space, who's making their first investment in a fintech or in a high-tech growth company, it's always going to be me advising them to take the one that's got the track record. It's incredibly hard to come into this space. And so enter the room the pension funds, that so far don't invest a lot in UK tech. And Neil, I know it's not particularly your wheelhouse, but I thought I would try to ask you if you have started to see any Mansion House movement, or is it still all just PR and policy?
Yeah, look, I think we have. If we wind back 6 years, no one actually knew that we'd gone from 53% of UK pensions funds flowing into stock market down to about 3%. I think the picture's even more stark in venture. Phil Bellamont mentioned 0.7%. I think it's as stark as 0.5%, according to Simon Menashe, MMC. The good news is that I think we've got political ownership now. We've got a pensions bill going through Parliament. We've seen the British Business Bank create the British Growth Partnership, which M&G, Aegon, and Cushion have participated in. They put £25 million into Wave. I would love for there to be many more partnerships like that. Schroders Capital also participated in Wave. The LTEF money is flowing, but I think we just need to see more of that and to have a faster cadence of investment.
Yeah, no, thanks. And so we're running out of time, and Rahul, I want to come to you. Maybe we have time for the final question that I wanted to give you all, but we'll see how we go on. Please do outline the top 3 most concrete reasons you're giving international fintechs today to come to London and not Singapore. Probably I would have said not Dubai, but that's pretty easy now. Not the US.
Where do I start? I can think of loads and loads and loads of reasons why London is the best place. And actually, not just London, but the rest of the UK. There's brilliant financial centres across the UK. Why come to the UK? I'd say right at the top of that list, we're a tech powerhouse. And we need to sell this more. We're at the top of our game on tech. We punch well above our weight across so many different respects, but especially in AI, R&D. You've all seen the news about Anthropic and OpenAI massively expanding their hubs in the UK, which will be their biggest hubs outside the US. Government is backing this very strongly. Just last week we launched the £500 million sovereign AI fund, which will back the best British founders and give access to compute to really a top tier of UK firms. So we're really a tech powerhouse. The second one, and I think this one is really, really important in all my conversations when I go around the world to why people are investing in the UK, which is the exceptional talent that we have here in the UK. We've got some of the best universities in the world. We've got truly global pools of talent that come to London and the UK, and we've got the scale of talent and the depth of talent that can match the ambitions of some of these firms who want to grow to scale. Again, the government's really committed to supporting this. We've got the Global Talent Task Force. There's a really constant push to get high quality talent and make that much easier for people to bring in. My team has worked quite a lot on that, and we've been helping firms unlock some of those barriers there as well. And then the third thing I'd say is a government that is focused on stability in this uncertain world, that is focused on the technologies of the future, that is focused on world-class regulations and regulators that are doing that. And I think that is really quite important in this world today, to have a government that's very, very focused on those issues.
Amazing. We got about a minute left, and so I wanted to ask you all a final question. You might have to fight for who answers first, because you might not have enough time, but we got an audience of policymakers, of fintechs, of investors. What do you see as kind of the one takeaway action that you'd like people in the audience to go away to try and solve this gap, this scale funding gap that we have, this capital gap?
Happy to start. Look, ask your pension providers what they're investing in the UK, right? I think we all want to have a share of these fantastic companies. We've got some unique assets in the UK. Rahul, just to build on that last point, a third of the companies on the London Stock Exchange are international businesses. We've had some fantastic case studies like Bank of Georgia, now Lion Finance, that joined 21 years ago, is now a FTSE 100. We've had Kaspi, we've had Boku. These have been fantastic stories, and we should all own a share. So get onto your pension providers.
Similarly, I think that mobilizing this UK pension capital is extremely critical to addressing the scale-up capital gap throughout the UK. And optimistically, we're in the early stages of that. I think the next step is really to kind of take a closer look at the trustee infrastructure to ensure that there's enough opportunities to allocate to venture and growth investors within that.
Britmaxing. Talk about what's happening in the UK. There's a lot of very, very exciting things happening, and I think we need to tell that story.
Oh God, where do I start? Minus 29 seconds. No, I think the UK pension money is exciting. I think it just needs some guidance on where it's going to be best deployed. So I think we're all getting very excited about UK pension money coming and flowing into venture, into fintech. Haven't quite seen it yet. Not entirely sure how it's going to work. So, but I think as an industry, I'd actually put it the other way to all venture colleagues out there. The only way that we're actually going to attract pension money is if we start delivering return that means that the pension funds want to invest in us. There's no point making it a charitable donation to venture capital funds. We actually have to prove that we can actually make money and deliver return to our LPs, which I think historically, the UK is quite nascent in this, and we have to demonstrate that. So that would be my request.
Amazing, thank you. Something for everyone, I think, in the end. We're out of time, so that just leaves me to say it would be great if everyone could say a huge thank you to our panelists for this panel today. So.